Okay, so you want to get a grip on DeFi. And you've brought some interesting articles about Phantom. Let's dive in.
Sounds good to me.
First things first, what exactly is DeFi?
Right.
Imagine a world where you can do all your banking, but without the actual bank. That's essentially what decentralized finance or DeFi is all about. It's like taking the traditional financial system and rebuilding it on the blockchain. A giant digital spreadsheet that everyone can see and no one can tamper with.
hmm
And as that Phantom article highlights, one of the coolest things about DeFi is that it puts you in control. It aims to give you control of your funds and access to financial services anytime, anywhere. This means no more waiting for bank approvals or dealing with their operating hours. You're in the driver's seat. We're talking about things like swapping crypto, directly lending, and borrowing without a bank.
Mm,
And it all revolves around these things called self-custody wallets. Expert
yeah.
speaker, what jumps out at you from this initial picture of DeFi?
Well, what's fascinating here is how DeFi flips the script on traditional finance. Instead of relying on big institutions, you're essentially becoming your own bank. That's a pretty radical shift, and it comes with both incredible potential and some serious challenges.
Okay, I get the appeal of cutting out the middleman, but why are we even using banks in the first place? The Phantom article points out that they handle transactions, store our money, lend it out. Seems pretty essential.
Yes, historically, banks and centralized financial systems have been vital for economic growth, but they also have some built-in vulnerabilities.
Okay, so the article highlights three main drawbacks. First, central banks and governments have a lot of control over the system. They can block individuals or restrict access to financial services. Second, banks aren't infallible. They made mistakes with lending, which can lead to problems like not having enough funds when customers want to withdraw their money. Isn't that what happened in 2008?
Exactly. The 2008 financial crisis was a stark reminder of what can happen when centralized institutions become over-leveraged and make risky lending decisions.
That makes sense. And then there's the third drawback. Those pesky bank fees, they really add up. And it feels like you're getting nickel and dimed for every little thing.
Oh, yeah, for sure.
So DeFi is stepping in to address these problems. And the tool it uses to do that is something called smart contracts. Can you break that down for us?
Imagine you're signing a contract, but instead of lawyers and paperwork, it's all handled by code on the blockchain. That's a smart contract. It's a self-executing agreement where the terms are completely transparent to everyone. And once the conditions are met, boom, the agreement is carried out automatically.
So it's like having a digital lawyer built right into the system. That removes a lot of the need for trust, and it streamlines the whole process. The article gives a great example of this with loans. You want a loan, you deposit collateral directly into a smart contract. Once the collateral's there, boom, the funds are released to you automatically. No paperwork, no bank tellers, no waiting around.
Right, exactly.
But isn't the lack of regulation in DeFi a bit concerning? How do we know things are actually transparent and secure?
That's a valid concern. While the blockchain itself is transparent, the code of a smart contract can be complex. It's crucial to make sure that the code has been thoroughly audited to avoid vulnerabilities or potential for exploitation. That's where the DeFi community plays a vital role in scrutinizing and verifying these contracts.
Okay, so that's how DeFi works in principle.
Mm-hmm.
But how do we actually access this whole DeFi world? That's where Phantom comes in, right?
Exactly. Phantom acts as your gateway to the DeFi ecosystem. It's a self-custody wallet, which means you hold your private keys, the digital signature that gives you access to your funds. It's like having your own personal bank vault.
And that brings us to the 12-word recovery phrase. The article really emphasizes how important this is.
Think of it like the nuclear launch codes for your crypto kingdom. It's the ultimate backup for your wallet. If you lose it, you lose access to your funds. No pressure, right? So you absolutely need to write it down and store it somewhere safe offline where no one else can access it.
Got it. So Phantom is our wallet, our key to this DeFi kingdom. What can we actually do with it?
With Phantom, you can do a whole lot. It lets you store, swap, and stake your crypto. And here's where it gets really interesting. Phantom also connects you to all sorts of other DeFi applications, often called dApps.
dApps. What are those exactly?
Think of them like apps on your phone, but instead of running on a company's servers, they run on the blockchain. They connect you to all sorts of DeFi services, from lending and borrowing to trading and even playing games. Phantom is like your multi-tool for navigating this decentralized world.
So back to our airport analogy, instead of going through a currency exchange booth, you can swap crypto directly within the Phantom wallet. No more lines, no more fees.
It's a much more streamlined way to exchange digital assets. And
Hmm.
because you're in control of your private keys, you're not relying on any third party to facilitate the transaction. That's a big part of what makes DeFi so appealing. You're cutting out the middlemen and taking control of your financial destiny.
Okay, I'm starting to see the appeal. So let's dive into two specific DeFi activities the Phantom article mentions: swapping and lending and borrowing. First up, swapping. The article talks about Uniswap as a popular decentralized exchange. It's kind of like a digital marketplace where you can swap different types of crypto.
Uniswap is a pioneer in the decentralized exchange space. What's remarkable is that it often facilitates more trading volume than some centralized exchanges. This shows that there's a real demand for decentralized alternatives.
So it's not just a small experiment, it's a major player in the crypto world. And then there's AAVE, which is all about lending and borrowing.
AAVD is a great example of how DeFi can provide traditional financial services, but in a more efficient and transparent way. You connect your Phantom wallet supply crypto to earn interest.
So it's like putting your money in a savings account and earning interest, but in the DeFi world.
Exactly. And the interest rates you can earn in DeFi, often represented as APY or annual percentage yield, can be significantly higher than what you'd find in a traditional bank. It's like interest rates on steroids. You can potentially earn much higher returns in DeFi, but it comes with higher risk as well.
But there's also the borrowing side. You can use the crypto you've supplied as collateral to borrow other crypto. It's like taking out a loan against your savings.
Exactly. And to manage risk, DeFi lending platforms often require something called over-collateralization. This means you might need to put up $200 worth of crypto to borrow $100. It sounds like a lot, but it protects lenders and keeps the system stable.
Okay, that makes sense. And I guess that's especially important because crypto prices can be super volatile.
Absolutely. If the value of your collateral falls below a certain threshold, the platform might automatically liquidate your position to repay the loan. So it's crucial to monitor your loans carefully and make sure you have enough collateral to cover potential price swings.
So we've covered swapping and lending, borrowing, but what else is out there in this DeFi universe? Yeah. The article mentions some exciting new things like NFT lending, borrowing, and flash loans, but we probably don't have time to get into those today.
The pace of innovation in DeFi is truly astounding. It seems like every week there's a new application or platform pushing the boundaries of what's possible.
So this is really just the tip of the iceberg. We got to stop somewhere, though, right?
hmm
We've covered a lot of ground in this first part of our deep dive. What stands out to you the most so far?
For me, it's the sheer potential of DeFi to completely reshape the financial landscape. It's still early days, but we're witnessing the emergence of a new financial system, one that's built on transparency, individual empowerment, and innovation.
That's a great point to end part one on. We'll be back in part two to explore the implications of DeFi going mainstream. Stay tuned. Okay, so in part one, we explored the basics of DeFi and how it's trying to shake up the financial world. We talked about smart contracts, self-custody wallets, and the potential for greater control over your own finances. But let's get even deeper here. What happens if DeFi goes fully mainstream? What if it becomes as common as using Venmo or Apple Pay?
That's a fascinating question. If DeFi truly goes mainstream, it could have a ripple effect across the entire financial system.
So how would banks and other traditional financial institutions react to this kind of disruption?
Well, there are a couple of schools of thought. Some experts believe that banks will adapt and integrate DeFi into their existing offerings, kind of like how they've adopted online banking and mobile apps over the years. They could leverage DeFi protocols to offer more efficient and cost-effective services to their customers.
That makes sense. Banks are pretty good at evolving to stay relevant.
Yeah.
But others argue that DeFi could pose a serious threat to traditional finance, potentially even leading to the decline of banks as we know them.
It's certainly possible. If DeFi can offer a superior user experience at a lower cost, why would people continue to rely on traditional banks? Think about the rise of ride-sharing apps like Uber and Lyft, which have disrupted the taxi industry, or streaming services like Netflix and Spotify, which have transformed how we consume entertainment.
So the future of finance could be a lot like that. Decentralized, user-centric, and constantly evolving.
hmm
That's kind of exciting, but also a little scary. I mean, right now, banks are still the go-to for most people when it comes to managing their money.
Right, and for good reason. People are used to banks. They trust them. But DeFi offers some compelling advantages that could really shake things up.
Like what? Give me some specifics.
Well, for starters, DeFi has the potential to dramatically reduce costs. Think about all those pesky bank fees we were complaining about earlier. Account maintenance fees, transaction fees, wire transfer fees, they all add up. DeFi transactions, on the other hand, can be significantly cheaper. thanks to the efficiency of blockchain technology and the elimination of those intermediaries.
So no more paying a fee just to send money to a friend.
Exactly.
That's definitely appealing.
Yeah.
And it's not just about saving money. DeFi also offers greater transparency. Remember, all transactions are recorded on the blockchain, a public ledger that anyone can access.
Right.
But isn't that a double-edged sword? On the one hand, it promotes accountability. But on the other hand, doesn't it raise privacy concerns?
That's a valid point. Privacy is an important consideration in any financial system. And DeFi is still working on finding the right balance between transparency and individual privacy. There are ongoing developments with privacy-enhancing technologies that aim to address these concerns.
Okay, so we've got lower costs and greater transparency. What else is there to love about DeFi?
Well, one of the most promising aspects of DeFi is its potential to reach the unbanked and underbanked populations around the world. Imagine a world where anyone with a smartphone can access loans, savings accounts, and other financial tools regardless of their location or credit history.
Wow, that would be incredible. It could truly level the playing field and create a more inclusive financial system.
Absolutely.
Okay, so let's say we manage to overcome the challenges like security and user-friendliness, and DeFi does become mainstream. What kind of impact could that have on the world beyond just finance?
The possibilities are vast. DeFi could impact everything from supply chain management to voting systems to the way we manage our digital identities. It's like a technological revolution that's just getting started.
That's a pretty mind-blowing thought. But I have to admit, I'm still a bit hesitant to dive into DeFi myself. It all seems so complex and risky.
I understand your hesitation. DeFi is still relatively new and evolving, and like any investment, there are risks involved. The value of cryptocurrencies can fluctuate wildly, and smart contracts can have vulnerabilities. But it's also important to remember that traditional finance has its own set of risks.
That's true. So how do we mitigate those risks in the DeFi space?
The key is to educate yourself, do your research, and start small. Don't put all your eggs in one basket, so to speak. And remember, you're in control. With DeFi, you're responsible for managing your own assets and making informed decisions.
Okay, that makes sense. So this brings us back to that institutional interest we were discussing. That's interesting. But doesn't that contradict the whole idea of DeFi being about individual empowerment? Isn't there a risk of big players taking over and centralizing things again?
That's a valid concern, and it's something that the DeFi community is keenly aware of. There's an ongoing debate about how to maintain the decentralized ethos of DeFi while also attracting institutional investment and driving mainstream adoption. It's a balancing act for sure.
So it seems like we're on the cusp of a major shift in how we think about and interact with money. But there's still a lot of questions to be answered and challenges to be addressed. This conversation has definitely sparked my curiosity. What stands out to you the most when you think about the future of DeFi?
For me, it's the potential for DeFi to empower individuals and communities in ways we haven't even imagined yet. We're seeing the emergence of new models of governance, new ways of organizing and collaborating, and new ways of creating and distributing value. It's a truly exciting time to be following the development of this technology.
That's a great note to end on. In part 3, we'll wrap up our deep dive by looking at some specific DeFi applications in action. Stay with us. All right, so we've spent the last 2 parts of this deep dive exploring the what and the why of DeFi. We've talked about its potential to disrupt traditional finance, empower individuals, and we've even touched on some of the risks and challenges involved. But now I want to get into the how. What are some real-world examples of DeFi in action? Where can people actually go to experience this new financial frontier for themselves?
Well, a great place to start is with the platforms we've already discussed, Uniswap and AAVE.
Right. Uniswap is that decentralized exchange where you can swap different types of cryptocurrency without going through a traditional intermediary.
Exactly. And its popularity is a testament to the growing demand for decentralized trading options. It's not uncommon to see Uniswap handling more trading volume than some centralized exchanges.
So it's a major player in the crypto space, not just some niche experiment.
Hmm.
And then there's AAVE, which we talked about in terms of lending and borrowing.
AAVE is a fantastic example of how DeFi can take a traditional financial service like lending and make it more efficient, transparent, and accessible. Remember, you can earn interest on your crypto holdings or take out loans using your crypto as collateral, all managed through smart contracts without the need for a bank.
Okay, so those are 2 well-established platforms.
Right.
What about some newer innovations in the DeFi space? We briefly mentioned NFTs and how they're starting to play a role in DeFi. Can you elaborate on that?
Absolutely. NFTs, or non-fungible tokens, are unique digital assets that represent ownership of something, like a piece of art or a collectible. And what's interesting is that they're now being integrated into DeFi in some really creative ways.
Okay, so for example, I've heard about people using NFTs as collateral for loans. How does that work?
Imagine you own a rare and valuable NFT. You could use that NFT as collateral to secure a loan on a DeFi platform. The platform would hold your NFT as security, and if you repay the loan, you get your NFT back. If you default on the loan, the platform could sell your NFT to recover its losses.
That's fascinating. It opens up a whole new world of possibilities for both lenders and borrowers. So it seems like DeFi is not just for crypto enthusiasts anymore. It's attracting interest from artists, collectors, investors, and even traditional financial institutions.
That's right. We're seeing a convergence of different worlds as DeFi gains mainstream momentum. And with that comes a lot of excitement, but also a healthy dose of caution.
All right, we've talked about the importance of educating yourself, doing your research, and starting small. But where can people go to actually learn about DeFi and how to navigate this complex landscape?
There are tons of great resources available online. Websites like CoinDesk, DeFi Pulse, and The Defiant offer comprehensive guides, news articles, and even podcasts dedicated to all things DeFi. And there are also active online communities on platforms like Twitter and Discord, where you can connect with other DeFi enthusiasts and learn from their experiences.
Okay, so let's say someone is ready to take the plunge and start experimenting with DeFi. What are the first steps they should take?
Well, the first step is to choose a self-custody wallet like Phantom. Remember, this is where you'll store your crypto and interact with DeFi platforms. Once you have a wallet, you can start exploring different DeFi applications and trying out some basic transactions.
And remember that 12-word recovery phrase, guard it with your life. So as we wrap up this deep dive, I want to bring it back to the listener. What are the key takeaways you want them to remember about DeFi? What's the big picture here?
DeFi is still in its early stages, but it has the potential to revolutionize the way we think about and interact with money. It's about transparency, individual empowerment, and the democratization of finance.
It's like the Wild West of finance, right?
Right.
With vast opportunities, but also inherent risks.
Exactly. And it's crucial to approach DeFi with both excitement and caution. Educate yourself, do your research, manage your risks, and don't be afraid to experiment. The future of finance is being shaped right now, and you can be a part of it.
So there you have it, folks. That's our deep dive into the world of DeFi. We hope you found it informative and maybe even a little bit inspiring. And before we sign off, expert speaker, I'd love to hear your final thought-provoking question for our listeners to ponder.
As DeFi continues to evolve and integrate into our lives, how do you think it will impact our relationship with money, traditional financial institutions, and even our own sense of financial agency?
That's a great question to leave our audience with. It's something we'll all be grappling with as DeFi continues to reshape the financial landscape. Thanks for joining us on this exciting journey. Until next time, keep exploring and stay curious.